Welcome to the Ohio Auditor Estates Financial Health Indicators Reports for Cities and Counties webinar. My name is Leanna Abley and I will be your instructor. This webinar will cover an overview of the financial health indicators, an overview and summary of the Financial Health Indicators Report, the effect of GASB 68 on the financial health indicators, each of the individual indicators within the Financial Health Indicators Report, a view of a complete Financial Health Indicators Report as well as the accompanying data sheet, a discussion of the heat map, the reaction to the FHI results, and instructions for any questions that you might have. The Financial Health Indicators project began in 2011, and we provided initial information in 2013. The goal was to identify cities and counties that had fiscal stress and to provide support for them in a proactive manner rather than a reactive manner when they were already in a state of fiscal stress. We used the data from the Hinkle system keyed data and the audit reports to generate the Financial Health Indicators reports and supporting data sheets. Initially, we will be providing the FHI reports for the year ended 2015. As the 2016 year-end information is provided, we plan to automatically generate a preliminary FHI report and data sheet when an entity submits their Hinkle system submission. We also plan to automatically generate a final FHI report for the period and data sheet when the entity's audit is completed and released. Those reports and data sheets will be available to each city or county on their Auditor Estate eServices account and will be available publicly on the Auditor Estates website. Some important information to note. The FHI report is not intended to criticize the operating decisions made by individual entities. No one indicator by itself is of use in identifying overall fiscal stress. Entities need to look at the combination of all indicators to determine whether or not there are early signs of fiscal distress. However, we would like every entity to look at each indicator for specific areas of fiscal stress. This FHI report, we hope, will be a useful tool in identifying those entities that are on a path to fiscal stress and prevent that stress from proactive actions to alleviate it. For each reporting year, each city and county will have their financial health indicators generated twice. The preliminary report will be at the time that they file their Hinkle system unaudited financial statements and data. The final Financial Health Indicator report will be completed at the time of the audit and generated as part of the audit process. Each city or county will receive its report with a supporting data sheet. Please note that if an entity does not prepare its financial statements on a consistent basis of accounting for 7 years, we will be unable to generate their Financial Health Indicators reports. Those entities will receive a one-page report explaining why the financial health indicators cannot be generated. There are 17 financial health indicators applicable to GAAP entities, with 15 of those applicable to entities reporting on a cash or modified cash basis. We have 3 classifications that an indicator can result in using the stoplight colors. Critical outlook, signified by a red color, cautionary outlook, signified by yellow, and a positive outlook, signified by green. The calculations to determine the cautionary or critical outlook are different for each indicator. If an entity does not meet the cautionary or critical measure, the report will default to a positive outlook. The Financial Health Indicators Report itself will talk about what those sections include. First, at the top of the page, there will be a summary so that you can see all 17 financial health indicators at a glance, as demonstrated on the screen. There will be a basic explanation for the reason for the report and the definitions of the indicator results. Critical outlook, or RED, is the more serious of the outcomes of the financial health indicator analysis. An indicator with a critical outlook signals a potential high risk of fiscal stress. The entities should closely review the cause of the critical outlook indicator and consider steps to alleviate this condition. The yellow, or cautionary outlook, is not as serious as the critical outlook. However, it signals the situation for which the entity should be aware. The entity should review the cause of the cautionary outlook indicator. Since left unchecked, it could develop into a critical outlook indicator. The positive outlook, or green indicator, is when an entity does not meet the critical or cautionary outlook as defined above. And a black indicator, or not applicable, indicates that the entity didn't report data for this indicator, or the data for determining the indicator is unavailable. The summary of the report will also include a reference to the accompanying data sheet, and if one or more periods of the audit's reports or opinions are other than unmodified, there will be a disclosure to indicate that fact. The effect of GASB 68 on the financial health indicators. As you know, GASB 68 is the accounting and financial reporting for pensions. And then, although this is required to be reflected as an accounting liability, it's unlikely that an entity will be required to satisfy this liability. Therefore, we've attempted to eliminate its effect from the indicators 1, 3, 13, and 16 for GAAP reporting. The calculations to eliminate the effect are reflected in the footnotes of the data sheet accompanying each FHI report. We've assumed that the entity allocated all of the pension liability to the unrestricted net assets, or net position. However, if an entity has allocated to both unrestricted and restricted, the calculated net asset or position without the effect of the pension liability may be artificially inflated, and as a result in a false positive indicator. If this occurs, we would suggest that the entity continue to consider that indicator and whether the true asset, net asset, or net position would indicate fiscal stress for the applicable indicator. So let's start with the individual indicators. Indicator 1 is the unrestricted net asset or position of the governmental type activities. This is the portion of net assets that has no related liabilities or restrictions to use. This indicator identifies when an entity has negative, zero, or declining unrestricted net assets or position. This is important because although unrestricted net assets or position may not be in liquid form, it is important to have net assets or position available and unrestricted as to use. If an entity's unrestricted net assets or position is declining or is negative, it leaves little or no room for unexpected expenses and therefore is a sign of fiscal stress. The critical outlook indicator for this indicator is a zero or negative balance. The cautionary outlook is a decline between the current and prior year by more than 1%. Similarly, indicator 2 is the unassigned fund balance of the general fund. The unassigned fund balance, again, is the portion of the fund balance that has no related liabilities and has not otherwise been obligated. This indicator identifies when an entity has negative, zero, or declining unassigned fund balance, and is important because although unassigned fund balance may not be in liquid form, it is important to have fund balance available without restrictions as to use. Again, if the entity's unassigned fund balance is declining or is negative, it leaves little or no room for unexpected expenses and is therefore a sign of fiscal stress. For indicator 2, the critical outlook is met by having a zero or negative amount, and the cautionary outlook a decline between the current and prior year by more than 1%. Now let's take a look at what those charts would look like under each outlook. For indicators 1 and 2, on a positive outlook, which is the green indicator, you can see that the chart, the graph, shows an upward motion of the amount that's increased over the years. That the current amount, in this one we are reflecting the current amount, is a positive number. For the cautionary look, you see that the indicator has shown that the amount decreased from the prior year to the current year in both charts. For the critical outlook, the amount for the current year is 0 or negative. You can see by the current information here on the graph. Indicator 3 is related to indicator 1 in that it reflects the trend of indicator 1 and the change in unrestricted net assets or net position. This indicator identifies the increases or decreases in unrestricted net assets from the prior years to the current year and is useful in identifying deteriorating unrestricted net assets or net position. It's important because a declining unrestricted net asset or net position can be a sign of fiscal stress. This indicator is important in identifying a trend of deteriorating unrestricted net assets or position, as well as how rapidly it is deteriorating. For indicator 3, there are two methods to reach a critical outlook. The first is if the current period and at least two of the previous 3 periods reflect a 0 or negative amount, or if there's a rapidly declining trend in each of the last 3 periods with a drop of greater than 20%. For a cautionary outlook, there's a declining trend identified as a decline in each of the last 3 periods with a drop between 10 and 20%. For indicator 4, this is the trend for indicator 2, the change in general fund unassigned fund balance. Again, this indicator identifies changes in the unassigned general fund balance from prior years to the current year and is useful in identifying deteriorating unassigned general fund balance. A declining unassigned general fund balance can be a sign of fiscal stress. This indicator is important in identifying a trend of deteriorating unassigned general fund balance as well as how rapidly it's declining. For indicator 4, there are again 2 methods to receive a critical outlook. If the current period and at least 2 of the 3 previous periods reflect a 0 or negative amount, or if there's a rapidly declining trend in each of the last 3 periods with a drop of greater than 20%. For a cautionary outlook, a declining trend defined as a decline in each of the last 3 periods with a drop of 10 to 20% would react with a cautionary outlook. So again, let's look at the graphs for indicators 3 and 4. You will see on the chart the gray bars represent the unrestricted net assets or the general unassigned fund balance. The purple line is the trend line, showing you the motion, the direction of those amounts. And the blue squares show you the difference between the current year and 3 years ago as far as the change. In these charts, you can see that the amounts are increasing and therefore a positive outlook. For a cautionary outlook, you will see that the trend is showing a downward movement, and the blue square is showing you that it's dipped between 10 and 20% in both cases. For the critical outlook, we have 2 ways to present this. The first is if the current and 2 of the 3 prior years are 0 or negative. As you can see on the chart, all of the numbers, all of the bars are showing a negative amount, and it's for all years. The second way to show the critical indicators for indicators 3 and 4, would be a decline in each of the last 3 periods with a drop of greater than 20%. Again, you can see that the amounts have dropped for 3 years, and in this case they have dropped by 60%. In this case they have dropped by 40%. Indicator 5 is the total general fund balance as a percentage of general fund revenues. Total general fund balance divided by general fund revenues is used to determine the percentage that has been reserved or is available for carryover to the prior year, the following year. It identifies reserves available in the general fund. The larger the reserve, the better the entity is able to absorb in the short term the impact of a sudden revenue loss or significant increases in operating costs, and to begin planning financial adjustments. This indicator identifies a low reserve of fund balance even if indicators 1 through 4 do not indicate negative unrestricted net assets or position or unassigned fund balance. The critical outlook indicator for indicator 5 is a negative percentage or very low percentage defined as 4%. Or if the general fund balance has less than a 2-month carryover, which would be 17%, a rapid declining trend defined as a drop of 10% or greater over a 3-year period. For the cautionary outlook, there are 3 criteria it could meet. The first is a low percentage, defined as 8%. Or if the general fund balance is less than a 2-month carryover, again a 17%, a declining trend defined as a drop of 5 to 10% over the 3-year period. Or if the general fund balance is less than 6 months, or 50%, a decline in each of the last 3 periods. Let's look at the graphs again for indicator 5. For indicator 5, we have 2 different graphs, and I will show you the difference for the different indicators. For a positive indicator, you can see we have a red and yellow benchmark line for the 4% and 8% amounts that were mentioned earlier. In this case, the current period is above the yellow line and therefore is a green or positive indicator. The bottom chart shows you the general fund balance and the general fund revenues, as well as the change in the percentage of revenues over the 3-year period as the black box. For the cautionary outlook, we have a demonstration of the different ways you can meet this outlook. The first is a low percentage, between 4 and 8%. So you see that the line for the current year, the blue, is falling between the red and yellow lines. If the fund balance is less than 17% and there's a 3-year drop of 5 to 10%, it can be visually determined by looking at this chart showing you first the percentage, which is about 15% for this entity, and then the drop, which again here is about 8%. If the fund balance is less than 50% and declines in each of the 3 years, you will see the decline along the line and you will see the percentage in the current year. This one is about 40%. The critical outlook for indicator 5 again can be reached 2 different ways. A negative or very low percentage, which was 4%. Again, you can see the yellow and the red benchmark bars on the chart. And in this case, the current number has fallen, the current percentage has fallen below the red bar. The second way is if the fund balance is less than 17% and there's a 3-year drop of 10% or more. You can see that the fund balance is below 17%. It's currently about 10%. And the drop has been, in this case, 30%. So it meets the criteria. Indicators 6 and 7 are related to taxes. We have different types of taxes considered separately since they are generally impacted differently. For both cities and counties, the trend for property taxes are included in indicator 6. For indicator 7, sales tax trends are included for counties and income tax trends are included for cities. Because there is no standard chart of accounts for cities and counties, many entities reflect all tax types under a general taxes line item on their financial statements. For the indicators to function as designed, the entities need to separately identify the two tax types when they key data into the Hinkle system, even if the taxes are combined on their financial statements. Indicator 6 is a decline in general fund property tax revenue. This indicator reflects the percentage change from year to year for property tax revenue. This indicator reflects declines in property tax revenues and is an indication when an entity may be facing financial hardship due to declines in significant revenue sources. It will also reflect the need for additional sources of revenue to maintain stability. For indicator 6, the critical outlook results if the property tax revenues represent a material 7 to 20% of total general fund revenues, and a trend of declining property tax revenue over the last 3 years in excess of 20%. Or if property tax revenues represent greater than 20% of total general fund revenues, a trend of declining property tax revenue over the last 3 years in excess of 10%. The cautionary outlook for indicator 6 signals a decrease in property tax revenue from the current to the prior year by more than 1%. Let's look at the graphs for indicator 6. You will see that the property tax revenues are represented by the gray bars on the chart. The trend line again is showing you in the purple line to show you if it's going up or down or staying stable. The blue dots and line are the amounts of the change from one year to the next. And the black square shows you the change between the current year and 3 years prior. In this case, they're trending upward and there are no decreases in taxes. So therefore, it is a positive outlook. The cautionary graph is represented by a decrease from the prior year to the current year. So in this case, you can see the trend is trending down. You can see that it dropped in the current year by 20%. The critical outlook for indicator 6. In this example, the property taxes are approximately 13.2% of total revenues. They have, as you can see, decreased 3 years in a row. You can see from the gray bars, and you can also see from the trend line. The percentage of the decrease over the 3 years is 35%. Indicator 7 is a decline in sales tax revenue for counties, or for cities, it would be income tax revenue. This indicator reflects the percentage change from year to year for either sales tax or income tax revenue. This indicator reflects declines in this revenue type and is an indication that an entity may be facing financial hardship due to declines in significant revenue sources. It also reflects the need for additional sources of revenue to maintain stability. This indicator reflects the percentage change from year to year for either sales tax revenue or income tax revenue. For the critical outlook, if the sales or income tax revenue represents 7 to 20%, again what we consider a material amount, of total general fund revenues, a trend of declining applicable tax revenue over the last 3 years in excess of 20% will result in a critical outlook. Or if the sales or income tax represents greater than 20% of total general fund revenues, a trend of declining applicable tax revenue over the last 3 years in excess of 10% will result in a critical outlook. For the cautionary outlook, a decrease in sales or income tax revenue from the current to the prior year by more than 1% will result in a cautionary outlook. Again, let's look at the graphs for indicator 7. For a positive outlook, we have a representation of a county and a city, the county with the sales tax and the city with the income tax. The gray bars represent either the sales tax revenue or the income tax revenue. The purple line, again, represents the trend. The blue dots and line indicate the change from current to prior year, and the black square indicates the change between the current and 3 years ago. In both examples, you can see that the tax revenue is increasing, the sales tax revenue or the income tax revenue. So these are both positive outlook graphs. For a cautionary outlook, you can see that from the prior to current year that we've had a decrease. In this case, it's a slighter decrease, but it is by more than 1%. Therefore, we have a cautionary outlook for an awareness. In this case, it decreased by approximately 8%. And again, an awareness of the decrease. We can't show you a critical outlook for this indicator because currently no entity has met this criteria. Indicator 8 is the percentage of general fund revenues that exceed general fund expenditures. So if they are expending more than receiving in 1 year, this indicator is calculated as total general fund revenues less total general fund expenditures divided by total general fund revenues. It will provide an indication of operating deficits and the size of the operating deficit compared to the current year budget. If expenditures exceed revenues, an operating deficit exists. This indicator is important because it reflects if an operating deficit exists, but also emphasizes the size of the deficit as compared to the current year's budget. This is an indication of the shortage in the current budget. A trend of operating deficits indicates potential financial hardship. The critical indicator for indicator 8 would be a negative percentage. The cautionary outlook would be a low percentage, defined as 5%. Here's a view of the graph for a positive outlook for indicator 8. You will see the gray bars represent total general fund revenue, while the blue bar represents total expenditures for the general fund. Again, we have the benchmarks for the critical outlook and the cautionary outlook. Critical is set at 0, cautionary is set at 5%. The blue line and blocks indicate the percentage of excess revenues. In this case, you can see that revenues exceed expenditures for the current year by approximately 8%. Therefore, it is a positive outlook. A cautionary outlook for indicator 8 would be similar to this graph, where you can see that the amount is falling between the red and yellow lines. A critical outlook for indicator 8 is reflected when the current year percentage falls below the red line. And in this case, you can see that expenditures are exceeding revenues for the current year. Indicator 9 is general revenues of the government type activities as a percentage of net expenses of the government type activities. The ratio of this indicator reflects coverage of net assets, total expenses less program revenues, by general revenues. This indicator determines if, on a government-wide basis, expenses are exceeding revenues. Net position is total expense less program revenues. Program revenues include charges for services, operating grants, and capital grants. This indicator is important to be aware if a shortage in revenues to cover expenses exists. A declining trend would indicate fiscal stress. For indicator 9, the critical outlook is met when the ratio is less than 100%, and the cautionary outlook when we have a declining trend of at least 3 years. The positive outlook charts for indicator 9 look like this. In the first chart, the net expenses are reflected in the gray bars, and the general revenues are reflected in the black line and squares. You can see in this case that revenues exceeded expenses. You can also see in the second chart in the percentage that currently it's above 100%, and therefore it's a positive outlook. The cautionary outlook isn't as apparent in indicator 9 in the first chart. But in the second chart, you can see 3 years of a decrease, which was the indicator trigger for cautionary outlook. The critical outlook for indicator 9, now you can see in the first chart that the revenues are far less than the expenses. And in the second chart, you can see that the percentage is below 100%, resulting in a critical outlook. Indicator 10 is the general fund intergovernmental revenues as a percentage of total general fund revenues. This indicator will reflect an over-reliance on intergovernmental revenues, which are subject to state and federal budget cuts. A high percentage suggests that the entity is heavily reliant on external governmental organizations for grants, entitlements, shared revenues, and therefore could be vulnerable to decreases in these revenue sources. It's important to be aware of the percentage of total revenues that are not considered own source revenues or local source revenues. Understanding the percentage of total revenues derived from the intergovernmental sources is important when trying to maintain financial stability while dealing with an economic downturn. For indicator 10, the critical outlook is met when the ratio is greater than 20%. A cautionary outlook would be a ratio between 15 and 20%. The graph for a positive outlook for indicator 10 looks like this. You will see the general fund intergovernmental revenues represented in the gray block and the total general fund revenues in the blue bar. Again, we have the red and yellow benchmarks reflected at 15 and 20%, and the blue bar and squares indicating the indicator. In this case, we are reflecting the amount is the percentage is below the yellow bar, therefore it is a positive outlook. For the cautionary outlook, the current year's blue dot would fall between the red and yellow lines, indicating a cautionary outlook. For the critical outlook, the blue dot for the current year is reflected above the red line, indicating they have more than 20% intergovernmental revenues in their total general fund revenues. Indicator 11 is the condition of capital assets. This indicator is accumulated depreciation as a percentage of depreciable capital assets. So this indicator will identify situations in which repair or replacement of a city or county's capital assets may be necessary. A high percentage indicates that capital asset replacement is imminent, and the entity may be delaying replacement of capital assets or significant repairs for cash flow purposes. When an entity delays improving or replacing capital assets in order to maintain cash flows for other purposes, improvement and replacement become absolutely necessary and may contribute to financial hardship on an already strained budget. The critical outlook for indicator 11 is a ratio greater than 70%, while a cautionary outlook is a ratio between 50 and 70%. Please note that this indicator will not be applicable to an entity preparing their financial statements on a cash or modified cash basis. The graph for indicator 11 reflects the cautionary and critical benchmarks at 50% and 70%. In this case, the current allocation, the current percentage, is below the yellow bar, and therefore it has a positive outlook. For the cautionary outlook, the current year falls between the yellow and red bars. And for the critical outlook, the current year is reflected above the red bar, indicating that it's more than 70%. Indicator 12 is debt service expenditures as a percentage of total revenues. This indicator is total debt service expenditures divided by total revenues for all governmental funds. This indicator identifies the percentage of the budget needed for repayment of debt. High debt service expenditures to total revenues is unfavorable since the entity spends more of its current budget on debt repayment. An increasing trend of debt service expenditures to total revenues may mean the percentage of budget dedicated to debt payments is increasing, and therefore less revenue will be available for capital asset repair or replacement or meeting current operating demands. The critical outlook for this indicator differs depending on if it's a city or county. For cities, the ratio greater than 15%. For counties, the ratio greater than 5%. The cautionary outlook for cities is a ratio between 12 and 15%, while the ratio for counties is between 4 and 5% for a cautionary outlook. Please note that these percentages are based on historical rolling data by entity type and will continue to be analyzed in the future to determine if modification is required. The graphs for indicator 12 are represented again with the red and yellow benchmarks and the blue line and squares. In this case, we show a county between the 4 and 5% for the red and yellow. In this case, it has fallen below the 4%. For the city, we're showing between 12 and 15%, and in this case, it has fallen below the yellow line. And therefore, these are positive outlook graphs for indicator 12. The cautionary graph for indicator 12, the current year falls between the red and yellow lines. You can see in both examples that the current year has fallen between those lines and therefore is a cautionary outlook. The critical outlook for indicator 12 reflects the current year above the red line in both situations. So that generates a critical outlook indicator for indicator 12. Indicators 13, 14, and 15 are average daily expenses or expenditure ratios. These indicators identify the number of days the entity's unrestricted net assets are positioned under indicator 13, the unassigned general fund balance under indicator 14, and cash and investments under indicator 15 will sustain the entity. These indicators are based on the daily average expenses or expenditures. These indicators are important because they identify the number of days the entity may operate using their unrestricted net assets or net position, their unassigned fund balance, and cash and investments. The fewer the days the entity can operate, the more financial stress they are under. These indicators provide an early indication of an entity's need to adjust their financial or expenditure planning. For indicators 13, 14, and 15, the critical outlook would result in 0 days or a negative number of days. The cautionary outlook would be less than 30 days. The graphs for indicators 13, 14, and 15 will appear like this for a positive outlook. You can see in the current year they are all above 30 days. For the cautionary outlook, the current year is reflecting less than the 30 days in all cases. And for a critical outlook, the current year is reflecting a 0 or negative number of days. Indicator 16 is the total percentage of liabilities to net assets or position. This indicator is the ratio of total liabilities of governmental type activities divided by total net assets or position of governmental type activities, and indicates the percentage of every dollar of resource available for providing public services that is owed by the entity. This indicator identifies entities that are overextended in terms of the percentage of every dollar which is owed to others. A critical outlook indicator would be a negative ratio or a ratio that is greater than 70% for cities or 60% for counties. A cautionary outlook would be a ratio between 50 and 70% for cities or 40 and 60% for counties. A negative ratio would represent negative net assets. Again, these percentages are based on historical rolling data by entity type and will continue to be analyzed by the Auditor State's Office in the future to determine if modification is required. This indicator does not apply if the entity presents cash or modified cash basis financial statements. The charts for indicator 16 on a positive outlook look like this. Again, you will see for a county, the benchmarks for cautionary and critical are set at 40 and 60%. In this case, the percentage for the current year is falling below those two lines. For the city, the indicators are set at 50 and 70%. And the current year is falling below the yellow line for a positive outlook for indicator 16. A cautionary outlook for indicator 16 for a county, the current year is falling between the red and yellow bars, or between 40 and 60% for a county. For the city, it's falling again between the red and yellow bars of 50 to 70%. A critical outlook for indicator 16 can be reflected as a negative ratio for either cities or county. It's falling below the red line. Or if the ratio for a county is above 60% or above this red line, for a city, it's falling above the red line again or above 70%. The red line in this situation is 0%, so there are two different red lines on the chart. You will see when we go to the actual report. The last indicator, indicator 17, is a budgetary noncompliance or unreconciled or unauditable financial records. This indicator identifies if an entity's recent audit reports include budgetary noncompliance and or if they have been an unreconciled or unauditable condition. This indicator will reflect if an entity is not complying with Ohio budgetary law and or proper accounting methods. Maintaining accurate, unreconciled accounting records and adherence to Ohio budgetary law is a significant factor in maintaining fiscal stability. For indicator 17, a critical outlook is met if the direct and material audit findings described above are for the current year and the two previous audit years. A cautionary outlook is identified when the direct and material audit findings described above are for the current audit year only. This indicator will only be generated for financial indicator reports that are final. The preliminary financial health indicator reports will not include indicator 17 since they are pre-audit. The chart for indicator 17 on a positive outlook looks like this, where the answer to the question of whether they had budgetary noncompliance or unreconciled or unauditable financial statements is no. In this case, you can see it was no for all 3 years. We are reflecting multiple years in the report so that you can see the trend, but it's only adjusted based on the current 3 years. The cautionary outlook for indicator 17 reflects that the current year is answered yes, that this entity had either budgetary noncompliance or unreconciled or unauditable financial records for the current year. And the critical outlook reflects that the answer is yes to this question for all 3 years. Now that we've walked through each section, let's look at a complete financial health indicators report. So you will see, as we told you earlier, that you will see the financial health indicators at a glance at the top of the report. It will also give you a count of total critical outlook and cautionary outlook indicators. There will be language to describe the purpose of the report. The auditor states responsibility for helping entities in these situations. Also a paragraph that tells you that 16 of these indicators are based on the financial statements, and indicator 17 are the results from the most current audits. Again, no one indicator by itself is helpful in identifying fiscal stress. You have to consider these indicators together to obtain an overall insight as to whether or not this entity is experiencing fiscal stress. But we encourage every entity to view in detail individual indicators that have a critical or cautionary outlook to determine the reason for the stress. Following that information, it defines, as we did earlier, what the critical outlook, cautionary outlook, and positive outlook, as well as not applicable, mean for this report. As we mentioned earlier again, there is a note referring to the data sheet. And in this entity's situation, they did have an audit opinion of 1 or more years that was other than unmodified. So that disclosure is made along with a link to take you to the Auditor State's website to look at the report and determine whether or not that modification would impact this report. Following the summary page, you will see each of the indicators that we discussed. The indicator and the outlook and the color of the box are based on the specific entity. The language describing the indicators is static and does not change from entity to entity. As I mentioned earlier, for indicator 16, there are 2 red lines. The one at 0 is a lighter red line. The one at the critical outlook, the other critical outlook, is more bold. There is an accompanying data sheet with each financial health indicator report. The graphs in the report reflect the entity's financial statements and audit data. However, for specific dollar amounts or percentages, we've also provided this data sheet. It includes the data calculations for each financial health indicator for multiple years, as well as the entity's financial statement amounts submitted as part of their annual filings and from their audit reports for at least 7 years. Let's look at what a data sheet looks like. So the entity's name would normally be here and tell you the basis of accounting. This top part are the indicator calculations for each year. It shows you the filing year, it shows you the indicator, and what the numbers or percentages represent for each of the indicators. The bottom portion of the data sheet is the financial information from the financial statements. It shows you whether or not those financial statements have been audited or unaudited, the opinion type. In this case, they were all unmodified, but if that was different, it would tell you that. And then again, all of the data from the financial statements. We do have some footnotes to describe, as I mentioned earlier, where we have tried to remove the effect of GASB 68. For example, here you see the unrestricted net asset amount and the net position unrestricted deficit less the pension. Footnotes describing how we've calculated each of those. We will be providing a heat map to provide a visual comparison of the results of the financial health indicators for all cities and counties. The heat map will be a grid of the color blocks from the indicators at a glance at the top of each financial health indicator report. So each row will represent a separate entity. The heat of an individual indicator across all entities will be evident in each column of the heat map. The more entities with a yellow or red indicator in a specific column indicates that the economy or other factors may be a cause for heat overall. The heat map also includes a filing status for each entity. If the filing status is indicated as final, it means the audit has been completed for that reporting year. A preliminary filing status indicates that the entity has filed their unaudited financial statements, however, the audit has not been completed for that filing year. A not started or in progress status means that the entity has not filed their unaudited financial statements and the audit has not been completed for the reporting year. An incomplete data status indicates that the entity's financial statements were not reported on a consistent accounting basis for 7 consecutive years, either by choice or due to changing from a village to a city, or the entity reporting on a regulatory cash basis of accounting. Therefore, the FHI report cannot be generated. These entities will receive a 1-page report indicating why the FHI report could not be generated. An asterisk after the filing status indicates the audit opinion for one or more of these years was other than unmodified and refers you to the spreadsheet to identify the years affected. As indicated earlier, the goal of the financial health indicators reports are to identify cities and counties that are experiencing fiscal stress and to help them by providing a proactive resource from the Auditor State's Office rather than reacting when the entity is already in a state of fiscal stress. We hope that cities and counties will take time to read and understand their FHI report for the period ending December 31st, 2015. But since these have been completed for data almost a year ago, as the 2016 Hinkle System filings and audits are completed, those will reflect the most current financial and audited data. At that time, we would encourage an entity or county with multiple indicators suggesting possible financial stress to contact the Auditor State's Local Government Services section to assist with methods to proactively reduce the sources of those identified stresses. For questions related to the Financial Health Indicators Report and/or the accompanying data sheet, please email fhindicators@ohioauditor.gov. To contact LGS to assist with a proactive approach to alleviating stress, please email contactlgs@ohioauditor.gov. Thank you for listening to this webinar.